So glad you're with me on Quantum Financial Show, where it's about you, empowerment about knowledge, learn about the stock market, news, and how to save more and live longer without breaking the bank. You can find us on Facebook, Instagram, and Twitter. Coming up, overview of my portfolio. Next, we're going to talk about going to a full commission stockbroker. Is it worth it? And after that will be OPEC and Russia seeking to support the price of oil. And then finally, financial players to launch a new stock exchange coming up. For the week ending on June 29th, second quarter of 2019, we did fairly good. Our portfolio stands with the individual and the Roth at $19,248.78. I only lost $1.90 of a difference of minus 0.58% for the week. I will show you some of the holdings or pies I have here. I have technology, utilities, energy, minerals, telecom, communications, industries, in my individual. And then in my Roth, I have healthcare, consumer discretion, utilities, financials, real estate, bonds, the Middle East, and Vietnam, and consumer staples. I will also show you here transparency of everything. I like to make charts and stuff of how everything looks. So this is the total monthly dividends of everything. So as you can see, the dividends have been going up month after month. And right now, in June, we're at 46.46, and then this is from 2018, though, of course. Then we went up to 99.76. March was 149.55 of this year. Then in April, we were at 27.34, and then June 104.18 for monthly dividends. And this is the quarterly dividends. As you can see, it progresses quarter by quarter, which we had total of 171.95 for total dividends. For the quarter of 2019, contributed $1,517.38. I will also go over my individual accounts with you. My individual from M1. My monthly dividends here too, as you can see. It's always good to see a graph so you can progress and see how you're doing. And then individual monthly contributions too. For the month of June, I contributed $681.28. Of that, $41.94 were dividends for June. And then I got a Roth IRA as well. I contributed $400.11, which of $62.18 was dividends alone. Then I have a Roth 401k from work, and I contributed $253.65. Of 53 cents was dividends. And then my employer graciously contributed a match of $126.46, and I got a dividend of 26 cents. And I also started Acorn beginning of June. I like it so far. And right now, I contributed $55.88, and I snuck in and got a dividend of 6 cents. So we're progressing. It's going to take time on this one. And then this is the total one. I like to keep bar graphs and charts. It just helps you along. And these are all the stocks and ETFs that I own that pay dividends for each month, each quarter, or once a year, sometimes twice a year. Now, I'm going to go on to a story here. It's a real problem for 20-year-olds. A lot of people not able to learn to handle money, personal finances, or stay fit, or end up as an adult and not well handling money as they might hope they would. There are many aspects to how you would start, but the key is to start investing as soon as you can. I'm here to tell you today you're not alone. Millions of people, 20s, somethings, or even in the 40s, have no clue where to start. There are many avenues you can go to. My first one is your work retirement account. Most, not all, will give you a choice from a pre-tax, meaning you get a tax deduction and pay taxes later, or the post-tax, meaning no tax deduction, but you already pay the taxes now. You never know what the taxes might be later. When I first started out many years ago, I started with a work retirement, a 401k, and contributed to just a match. The match is where you would put in, an example, 3%, and your employee would match up to 3%, either 50% or to 100% to that match, which in theory, you are saving 6% retirement. It doesn't stop there. Open up a Roth IRA at a well-established brokerage discount like TD Ameritrade, Fidelity, Vanguard, or Charles Schwab. They are all good. Myself, I went with Charles Schwab back in 1992. Great customer service, awesome support, and available 24/7. Stay away from banks. Once you get those open, your next step is to, what do you invest in? Some say invest in the target fund, the year you think you might retire. Some say an index or in individual stocks. All are good choices. It's always good to have a broad range of investments, from the United States markets to emerging markets to bonds. The U.S. market only accounts for 37% of all wealth in the world. A lot of opportunities to build more wealth. Best time to start is yesterday. A few $100s a month in your 20s will end up being $1 million down the road. There is a lesson to be learned here, is everyone should understand the basics of money. The longer you wait, the harder it will be, and the more money you have to put in later each month. If you have any bad experiences, let me know. I have a story here that you might find very interesting. We all know who Wells Fargo is. I get upset when people put their trust in stockbrokers who turn out to be a hoodlum, runs off with people's money. Too often the banks and brokerages look the other way. The New York Post follows a stockbroker industry very closely. There's a story here of people having their accounts wiped out by brokers who end up being the bad villain. Their brokers have gone through all their money that people trusted them with to invest in people. The full stockbrokers do not follow fiduciary standards, meaning if you get a legit person from a bank or broker, they do not have any legal obligation to put you in good investments. They are, or will put people in suitable investments, or in the broker's eyes, junk. They line their pockets while you get a lower return. But if you went to a discount broker who has fiduciary rights, your interest in mind first, the New York Post has an article about a crooked bank named Wells Fargo who cleaned out $2.5 million families' piles of money to legit judgments that they received over the years. The thing is, these families have been through a lot of legal action against Wells Fargo to get their money back. The worst part of it all is Wells Fargo do not have their act together, just dishonest brokers. 50% of all Wells Fargo's brokers have no disciplinary action on their records. Most of these are kept secret. 50% do something bad or something wrong that harmed a customer one way or another. A typical broker will have less than 1% likely on their disciplinary action record. Yet another warning that Wells Fargo is a dangerous place for you to do business. Next up, we're going to talk about OPEC and Russia seeking support and the price of oil. OPEC is a petroleum export country used to stir up fears in an oil markets. Not so much anymore. OPEC still has the ability to shake up the oil prices. On Monday, June 24th, OPEC and other oil producers, including Russia, will begin a two-day meeting in Vienna. These meetings will include a 100% cut oil production, shorting the prices to go higher, especially the United States, as we of the United States are producing massive numbers per day of oil, over 10.5 to 11 million barrels per day, which 5 to 7 years ago was just a dream. One day we might be able to pass Russia and Iraq of the number one oil producer in the world. OPEC find themselves in a predicament of reducing their own output to sustain prices at levels they consider acceptable, but still wants those oil prices higher and encourages more productions by the United States. The meeting, if anything expected at the meeting, could send ripples through the energy and financial markets. OPEC expects oil companies from Russia, and Russia will agree to these cuts of removing 1.2 million barrels per day, the equivalent of 1% of global consumption from the markets. Countries like Saudi Arabia and Kuwait depend on petroleum revenue to finance their budgets. Russia is not a member of OPEC, has been functioned to extend the cuts. President Vladimir Putin of Russia told reports at the summit meeting of the Group 20 nations in Japan Saturday that they would go along with the cuts. OSHA has a habit of opening and closing its oil production without waiting for organization meetings. OPEC decisions making it completely overshadowed by Saudi Arabia's actions, director of the RS Energy Group. Booming oil production in the United States and the slowing of the world's economy growth cause of President Trump's trade wars are largely out of OPEC's hands. Russia, which is not a member of OPEC, is a big player in reduction of oil production. OPEC has a reputation of cheating on output agreements. This time, these rounds of cuts are different. The Saudis have cut 3 times the amount of oil. They are producing 9.7 million barrels per day. 1 million barrels less than they would of last year this time. The Saudis are taking a big hit with the cuts of production. How long will the Saudis bear this burden? In 2014, the Saudis walked away from this swing production rule, letting oil prices crash and the pressure of conflict with Russia to join the cuts. OPEC is being sued into major cutbacks. With a time of political instability in the United States, sanctions have removed over 2.5 million barrels a day from two members, Iran and Venezuela, compared with 2017 levels. The surging production from the United States is the main cause of OPEC's plan. Output is expected to increase from other countries outside OPEC, Canada, and Brazil. For the United States, an increase in production could prove a better buffer if there's a major disruption in supplies. So we are eventually going to be the #1 oil producer in the world in the next 5 to 10 years. And OPEC or Russia will not be able to stop the oil price in the market ever. And here's a nice fine story I saw that is very interesting, which I love this story. I read it and I had to share it. Morgan Stanley, Fidelity, Cattle Securities, and a host of other companies have agreed to a joint new cost stock exchange. The new stock exchange will increase competition and improve operational transparency and reduce fixed costs and simply trading. The new exchange will be called Members Exchange, or MEMX. Will be funded and controlled by 9 institutions: Bank of America, Merrill Lynch, Charles Schwab, E-Trade, TD Ameritrade, UBS, and Visa Financial. The new exchange comes after years of headaches among brokers and traders with high fee exchanges. The exchanges will have basic order types and the latest technology. The big 3 U.S. exchanges have faced criticism for higher fees for services like data feeds. I hope you enjoyed my video today. And if you're new here, think about subscribing and leaving comments of what you thought of this video. If you have any questions, please do so. Thank you for watching today, and I will see you guys in the next video. Bye-bye.